good afternoon, or good evening. Absolutely no idea what time you're watching this, but it is 5 p.m., 2 minutes from 5 p.m. over on the East Coast, 5 a.m. Monday morning over on my side. And it is your full moon today. Full moon happening here on July the 21st. Happy full moon. It is Jover. It is Jover. There is no longer a Joe Biden 2024 presidential campaign. It is Jover. Everybody out there, and actually shocking to the rumors that were coming out over the weekend that Hillary Clinton would be running in 2024. Hillary Clinton and Bill Clinton have endorsed Kamala Harris. So, as of a current election forecast based on betting, this is based on betting, 64% chance that Donald Trump wins, 31% chance that Kamala Harris wins, and nobody actually knows who the Democratic nominee is until August 19th week when they have the Democratic National Convention over there in Chicago. This week, big week, it starts. It now starts. This is the first of two big weeks when pretty much 70%, 75% of the S&P 500 reports earnings. Tuesday morning, we have UPS. We also have Spotify. On Tuesday afternoon, we have both Tesla and Alphabet. We also have Visa. Wednesday morning, absolutely nothing. Wednesday afternoon, I haven't been watching this, but Barbara mentioned it to me, and I am going to pull it back up because Chipotle had their stock split. Chipotle Mexican Grill, CMG, see if there's anything similar to McDonald's that we can play off of that. And then on Thursday, you get American Airlines, and after the close, nothing really. Texas Roadhouse or Decker's Brands, nothing after that. So, yeah, it's not that big of a week. You got Tesla, you got Alphabet, and that's pretty much it. So, I am going to cut to the chase and bring you forward to the end of the video right here, right now, in the next couple of minutes, so that you don't need to go and watch it all. You don't need to listen to my voice. I appreciate those guys who took out the time to do one-on-one calls over the weekend, especially the new guys. Not that I'm downplaying any of the existing members, but I really do appreciate that because it helps me to answer your questions better now that I know more about each of you individually. And like I say, message me directly as much as often as you want to. So the S&P finished down 133 points on the week, 172 point range on the week, and we got the check mark on minus 3% as we came down there to the lows on Friday. And we also got, can't put a check mark in here because I don't have the column space, the 23.6 retracement to the April lows. So what does it mean? What does it mean? What does it mean? Well, we have 3 consecutive red closes in a row. That right there alone strongly signifies that, guess what? That's all you get is 3 red closes in a row. All you get is 3 red closes in a row. But in April, when we had our sell-off in April, we had a hell of a lot more than 3 red closes in a row. We closed red the entire week of OPEX. Well, OPEX is over. Actually, I forgot about that. I got to mark my OPEX week. Dink. Boom. That was difficult. So yeah, 3 red closes in a row. That has pretty traditionally been your limit and telling you, hey, you're going to get bounced. So with that in mind, all in of itself, I like this trade for Monday, for tomorrow morning. I like this trade. The July 22 Monday, buy the 5,500 puts, sell the 5,505 puts, being a bullish put spread, looking for a close above 5,505, which coincidentally we closed on Friday exactly at 5,505.00. And this would be the risk that I would be looking at, and I would be looking for at least $2, but more significantly, which I do not think that you're going to get, is $3. But I do like this trade for Monday, and it looks good as well when you start to consider, taking into consideration is all, we close green on Tuesdays. I mean, we have been closing green on Tuesday since the end of April. Since April 30th, we have closed green every single Tuesday. And with the way that we're set up right now, there's absolutely no reason to think that we won't be closing green come Tuesday. Over onto the QQQ, one of the biggest down weeks on record. Down 21 points on the week. The NASDAQ finished down 6.19% from the all-time highs placed just a week ago. Over there, 503.52. Actually a little bit higher than that pre-market. You have 2 red weeks in a row. And when you come back, again, coming back over here to the 3 red weeks that we had over here in April, 3 red weeks in a row warning, bang, bang, boom. You just got your bang, boom. And I'd be really, really cautious about trying to get short, considering everything that we looked at coming into this. Over onto the IWM real quick, 2-point range, or 2-point up on the week. Tiny little range, 12 points. Not too much, not insignificant, but, not horrible. And back into the 216s. Now, I would not say that this 2-day 6.68% move that we had a week ago is ready to commit back down into the low 200s until we get that breakdown below 211.88. That's what I got to see on the IWM. Down below 211.88, and then we can start saying, okay, the whole bullshit about IWM, it's all over. So, quickly recap over there last week. Monday, entered. Friday, July 19th, SPX 56.45, 56.40s, $3 credit. End of the day there on Friday, like I sent out to you, 56.45, 56.40, 150% on that full credit. And no, I was not being just tough love. You are an absolute moron if you did not take advantage of that trade and take on the full credit.
Straight up, pay him. Pay that man his money.
So, went into last week looking for a drop and looking again for a full moon low, which today being the full moon. So this pretty kindergartenish drawing of an arrow, which you can't draw on Thinkorswim properly, I can remove because we essentially made it almost to that 54.85, 54.46. Can we? Yes, we can. What it's looking like here, and I'll do this in real time if my cat will get out of the way, stop touching the screen, is, okay, we don't need that. Our retracement coming back, well, we'll draw it the other way to make it proper. Our retracement from this drop would bring us right up here to around that 55.38, roughly to that 55.48 area. That would be a nice area to be bounced to. That would be a nice little 1, 2, 3, give us a 4, and then our little 5 down here into that range, and it's over. It's over. It's completely finished. Is it done, or is it wave 1? We don't know that. If it would be wave 1, which I strongly suggest it is, we will get a bounce up here into this low 55.80 range, 55.75, and then after the FOMC meeting at the end of the month, we'll start to see the downside move. A little bit too early for that. Like I said, full moon low. That's what we got. We got our full moon low. Look over on your full moons and you can see your full moon doesn't lie. Gives you what you're looking for. Actually, I need to widen that just so it fits everything else. it gives you what you're looking for. Your full moon it's not a joke. There's no joke about your full moons. And with this coming down here, I like what it gives us, which is that full moon low. Are we going to go higher? I can't give you that answer right now. But what I can tell you is I like the full moon low being placed. As extended as we are, there's no more Joe Biden. It's now Kamala Harris. So will the Trump trade take over? We don't know that yet, but what we can definitely say is we are oversold. Come again onto the SPX and looking at what we worked with every day, and we got a 3.04% decline over the course of essentially 2.5 days. Wednesday drop, the Thursday drop, the Friday drop. We never came down to 54.46. We never broke into that 54.85. Close enough. We never broke into it. So this is a dip. That's all that it is. It's a dip. And more so, when you come over here and you look at the QQQ, this is a very aggressive dip, and it worked out absolutely perfectly. Boom, boom, 6.2%. Zoom out, give yourself a wider view. And as you can see here, as we came up off of CPI in the middle of June, support, 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 support. Resistance, 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 breakout, boom. Drop, bounce, resistance, right back down into here. So, blind eye, you're looking for a rejection in this 487 area. 487 as well from a blind eye would give you a nice 1, 2, 3, a little bounce up here into the number 4, and then a fifth wave lower. Fifth wave looking to take on that 460 area. We don't have that yet. All that we have is the dip that we have, and everybody has the same exact dip. So I bring you on over here onto the NASDAQ, the NDX. Beautiful. 1, 2, boom. 3 down to the 200 extension. Absolutely fits. Negates anything being extremely bullish when you come back here. Looking at this move that we had coming off of the late part of June, not the early part, but the late part, when we were trying to have nothing but a bullish view because of the view that we had, negated. So that is gone. All that did was give us what we wanted. So this bullish 4 is out of the window, and the only view that I have here on the NDX is a bearish view. And that bearish view means that we are looking for a bounce, and when that bounce does get back up into this 19,950 area, then we should start to see the move to the downside, which again, this being the June CPI, would be the first foremost target, which, going back to your QQQ, is right around that 460 area. So that is what the view would be, is a bounce. The bounce failing as we go into the FOMC next week, and then getting a move to the downside. Come over on to the IWM. IWM coming off that CPI report a week ago. Kaboom! Just exploding up through that 207 into that 210, 212. Then making this euphoric little, the small caps. All of these companies that are going to go bankrupt and can't borrow money and are, super leveraged. Let's go put money into them. Well, it was OPEX week, people. Here's your move to the downside over on the IWM. And again, not much really to look at because there's no gaps to be filled to the upside. If we can, and if we do see that breakdown into this gap, this 214, 213 area, then we should start really feeling comfortable about getting a little bit of a bounce and then a move down to that 207, most likely seeing 203 before the middle part of August. On to DIA, flat week. Same thing with the IWM, flat week. But yeah, flat week. And zooming on out to how we have been, zooming on out even to wider, how we have been coming off of that April low. And yeah, it all really does fit. You had a nice 1, 2. Here, your 1, 2, 3. This would be a bullish 4, like I mentioned before. A bullish 4 would support right around this 400 area. And that's essentially where we came down to. So as long as we can hold that 400, we should be looking at the DIA as being a bullish pattern, looking for a higher move back into 413, up into the 415, 420 area. As of now, that's what we're looking at. as long as this 400 holds. There's nothing at all to start screaming and hollering, yes, it's not working, until you can get DIA down below 390. So as long as it's here, it's still working. 395 is your warning. 390 is start to where you start to get confirmation. And again, going back to why I believe that we have hit our bottom, we have had our dip, we have had 3 days in a row, and we are now due for a bounce. And that is the VIX coming up to the 1622 and actually giving us a little bit of a gift and visiting that 1706. Your VIX is really everything that you really need to see. It's everything that you need to know is your VIX. As we had this not as horrible VIX down in March, your move up here into the 17s and then your big sell-off over there in April, beautiful visit to that 2102, and then you started to get lower highs on the VIX and lower lows on the SPX, which was another confirmation that you are getting your bounce. The VIX trolled all of this for a very significant period of time, and as you come over here into February, where we slightly had a little bit of a dip, 1622, that's it. It's over. So again, using your VIX for what the VIX is worth, we got that VIX up there into that 17 above 1622. Very strong suggestion, together with the full moon, that our dip has now dipped. Now we look forward to what's going to be coming ahead. So again, on the NDX being that everything is in the NDX, looking for a little bit of a bounce, and then after that bounce retraces up here to around that 19,450 area. We'll see what we got. 19,450, 19,500. On to the QQQ. Pretty much the same thing, like I said. Nice little ABC 200 extension, 1, 2, 3. Don't know yet because we haven't seen 4, but a bounce up into this 483, essentially into that 487. That is what should be expected. Any break above that 487 and starting to get into that gap back up to 496, then we got some things to start looking at, and whether or not this is going to be something very similar to what we had back in 2018, where we progressed all the way up until September, the end of September, into October before we had our drawdown into December. It doesn't fit. Doesn't fit into an election year. Doesn't fit into the cycle of where we are in the Elliott wave. So again, narrowing in the view to make sure that everybody is focused and dialed in. As of right now, we got our dip. That's exactly what we expected. We got down here. What we should see now is a relief bounce. Not necessarily a green week, but at least a relief bounce for 1 or 2 days, maybe 3. And when that starts to prove itself, then we can start to see a little bit more. Pull 2 things over here for you again, just to show you again why we should be looking at a bounce. This being the NDX 1 hour. I will zoom it out a little bit more. 30 days. You're starting to see this buy divergence set up on the 1 hour. Very, I wouldn't say aggressive, but very clean buy divergence that's starting to show up over here on the 1 hour. And again, down on the 1 hour, when we were sold off on Wednesday, the 1 hour's down here below 5. We ended the day over here on Friday. We're up there around 13. So it does very much look as if it has been oversold. Come over here onto your 4 hour, with your 4 hour getting oversold being these just absolute face-ripping bounces that we've been getting on the NASDAQ. Well, all 4 hours down here at 6. We were down here back in the, middle part of June, down in the 4 area, down in the 7s. Over here at the end of May, when we knew we were getting a bounce, we were down there below 3. Come back a little bit further on a 4 hour. Again, this year, down in April, when we knew, again, having 3 red weeks in a row and where we were, here we were down below 2. And like I mentioned earlier in the week when we had the sell-off over there on the NASDAQ, the RSI on the 1 hour on the NQ was actually below 1. So We've taken a lot of meat off of the bone with this dip, even though this dip is just a teak, tiny little crack in the ice. Not even a snowflake. We should be looking at a bounce. And unfortunately, that bounce, it'll take a couple of days. It may take, may take 5 days to get a bounce. But that bounce is what we should be looking at now. So downside, I would call extremely risky getting into new downside positions. And with the week, with how we've got earnings coming up, let these guys report. UPS reports Tuesday. After they report, we can trade UPS. Tuesday after the close, Tesla, Alphabet. After they report, Wednesday morning, we can trade Tesla. We can trade Alphabet. Over here, CMG, Ford. Don't like trading Ford. But CMG reports on Wednesday after the close. On Thursday, we can trade CMG. There's a lot of different options that are out there in order to be able to take advantage of and go out there and trade. And considering that this is a very big week in earnings, the beginning of the 2 big weeks, I wouldn't be expecting too much out of the SPX. And again, having said what we said about the NASDAQ, it looks as if you have your bottom and you should be getting your bounce. So enjoy yourselves. Enjoy all of your political rhetoric and how everybody's opinion is like their asshole. They have it and they want everyone to smell it. Go out there and spread your voice about who you support and who you don't support, because at the end of the day, it doesn't fucking matter.
The chef of a prominent figure was found dead today in what appears to be a paddleboarding accident. Find out whose chef it was tonight at 10.
Welcome to Martha's Vineyard. Are you our new chef?
Thank you. Yeah, I'm John.
Have you met Michelle yet?
Hello? Someone there? No, I haven't had the pleasure.
Just make sure you get her steak by noon.
I've been getting some weird vibes here. Feels like I'm seeing things I'm not supposed to see. I don't think these people are who everyone thinks they are.
Are you enjoying the view of Michelle?